It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're looking at utilities. That's after the sector saw a shining third quarter. I'm here with Anthony Crowdell. He is Mizuho Americas Managing Director and Senior Utilities Analyst. Anthony, thank you so much for being here. Utilities have been on fire this year, as we know, in part because of the outlook for rates to go down and in part because of data center demand, of course. So let's get to it. And the stock that you like, which is Pinnacle West. Now, this stock's done pretty well along with the rest of utilities. It's up about 21% this year, about 20% over the past 12 months. So let's get to why you think it's got further upside. It's based in Arizona, Phoenix, Arizona. And you say regulation there is improving. How is it improving?
Sure. So if you think of utilities, the biggest thing is state regulation, up 20%, or I think for the year, that's unutility-like. But regulation matters, especially in the state houses. Arizona's been a challenging jurisdiction for a number of years. We've seen a changeover in the commission there, and they're now looking at ways to help the utility, what we call under-earn, looking for ways to minimize the under-earning utilities facing. And so we think they're going to have approval maybe we call it a policy statement, maybe later this year. And we think this is going to give a continued momentum on this story, and we continue to look for PNW or Pinnacle West to outperform throughout the year and beginning in 2025.
So it's not necessarily that the rates are going higher, it's that they can capture more.
Basically capture more. I mean, if we went to like Utility 101, if you think about a utility is able to earn an ROE or return on equity, and it's a 10% right now, we'll just use roughly right now, the average is about 9.7. So if a utility is able to earn 9.7, there's different reasons why they typically under-earn. A lot of times it's based on a historical test year, or they're looking at expenses from the previous year. And what's happening right now is the regulation is the regulators are realizing that we need to help the utilities get to their allowed return. And so they're creating mechanisms that will help the utility. We may look at formula rates or forward test year, we may call it, to help them hit that 10% ROE. And that's what we mean by improving regulation. It will help the utility earn a better return, but it's not necessarily changing the cost per the customer.
Yeah, I think we need to learn more about utilities, considering how well they've done this year. So it's good to learn a little bit more. And on continuing on that thread, attractive load growth. What are we talking about here?
Yeah, so we went through 15, 20 years where there was no load growth in our sector. I mean, basically how much additional electricity you're selling each year. If you think of booming Manhattan, I think their load growth for the last 10 years was somewhere between 0.5%.
Wow.
So efficiencies, we have these LED lightings, we have these sensors that turn off the lights in our office as soon as we leave. That's really weighed down on the number of units that a utility sells. All of a sudden, bam, what happens? We get a pandemic, we get a lot of relocation going on to the communities like Phoenix, Arizona, and then we get this great tailwind of data centers, this onshore of manufacturing, and all that is helping utilities in certain locations sell a lot more units. Pinnacle West, their load growth, again, we talked about Manhattan would be about between 0.5%. They're seeing load growth about 5%.
Gotcha.
So for utility, that is just
a lot.
A lot's a great way, yes.
And then there's the valuation here. So it is trading at a premium, but not at a huge one.
Right, so we think that this premium is very understated, meaning that, correct, like you say, it's not a huge one. I mean, we think this should go up, but also what we think, because of this additional load growth, because of the ability for the company maybe to minimize that under-earning, we maybe in 2026, and utility people do look out 2 or 3 years, we could see a step change in their earnings growth that makes this premium more of an inline or maybe a slight discount. So you're playing for 1 December, hopefully we get a catalyst that they're going to give us this regulatory lag docket or policy statement. Then we're looking for, as we work our way through 2025, when the focus becomes 2026, on do we get a change or a step change in their earnings growth rate.
Gotcha. So we always like to point out a potential risk with these guys. And so in this case, it is just like the upside regulation, the downside could be regulation.
Yeah, that's the good and bad or the boring side of utilities. It really all comes down to, a lot of it comes down to regulation or their state houses. I mean, a lot of times people call me up, hey, what's going to happen with this presidential election? I mean, we're more focused on the state house elections. Making matters even more challenging in Arizona is the utility regulators, there's 5 of them, they're publicly elected. A lot of other states that are appointed by a governor, so you do have to follow small local elections going on with the regulators there. We believe right now there's 5 commissioners. Right now it's about I think it's 3 Republicans, 2 Democrats. We think you'll have a similar mix, or if not more Republicans on the commission, and we think that this momentum will continue, helping Pinnacle West minimize their under-earning.
All right, let's get to the stocks that you think folks should avoid right now. This one's done well this year, too. It's FirstEnergy, based in Akron, Ohio. It's also up around the same amount year to date. This, too, we're talking about regulation.
Right. Yeah, we're talking regulation again.
And rates.
And rate, right. And so this is, I don't know if it's a void, it's something we really want to be cautious of. And the reason is we don't know how state regulation is going to work out here. As we talk about Pinnacle West, we think we're seeing regulation changing for the better. We're not sure if Ohio, if the regulation for FirstEnergy is changing for the worse. The reason we say that is the previous management team had been involved in some bribery cases with the regulator. They're no longer with the company. There's a whole new management team in there. We talk about they've done a big change in the management, but will the regulators give a punitive decision or a more balanced decision? What we've seen in our space is that first rate case you have, or the utility has, after something has gone haywire like this, it's been more of a punitive decision. And so it's such a binary call in FirstEnergy in Ohio. If the regulators are supportive of the company, if they're going to give them a balanced decision, this would be an attractive name. We're not ready to say that just yet. And we think since this rate case will play out at least 12 months, it's probably something you want to stay on the sidelines before you jump in.
Well, it's interesting because as you say, it's a new management. They have settled. They've paid fines. And so this punitive rate decision would be on top of that.
No, I mean, you bring up the buy thesis on it. I mean, we get called a lot, and investors looking to pitch this as a buy to us. We're more cautious and saying, hey, new management team, they've paid their fines. They're going to base a decision on the record. The company's invested a lot of capital in the state, and they should get an adequate return on it. But so far, we've seen more punitive decisions come out from regulators following an event that happened here. So we're not ready to say that things are going to be fine here. We want investors to avoid this or stay on the sidelines until we get a decision.
So if they don't get the good decision, what happens to the balance sheet?
Well, they don't get the decision. That's the risk here. The balance sheet is more concerned that the operating companies, the utilities, what we like to call opcos for the utility nerdos out there. I mean, if you look at the opcos of the utilities, some of the opcos, especially in Ohio, I think 2 or 3 of them have more of a challenging balance sheet. One of them has a FFO to debt metric of 5%. If you think of an average metric for a utility, it's probably somewhere 15 to 20%. So if you get a challenging decision, you could see the company have to maybe push more equity down to these opcos, and that would be now we get into the decision of how they're going to fund that. Do they fund that with additional debt, or do they fund that with additional equity? Again, it matters how punitive this decision, right. Just a inline decision or not that favorable decision. I don't think we're going to see anything like that. But should we get a very punitive decision from the Ohio regulators, you could see the company having to downstream some equity there.
Right.
It's more of a minor risk, but it's something we think it's baked into the company. Right now, it trades at a 13% discount, gotcha. And we don't think we see changes to that discount until we get clarity over Ohio.
And by the way, for folks who are not utilities nerds, FFO, funds from operations.
That's it. You got it.
And then the risk is obviously to the upside. The thing that could go right is that it goes their way.
Yeah, we talk about it. It's trading at a 13% discount. They're growing earnings 6 to 8%. The dividend is solid, and you have a new management team that investors really respond to. You get a good decision to pick up a company growing 6 to 8% at a 13% discount. This name you could see re-rate to a group average multiple. We're not ready to say that yet because it's so binary, this Ohio rate case.
And real quick, when is it expected?
It's expected later in 2025. So that's the problem. You're kind of on the sidelines for a while, which that long-term catalyst keeps us even more comfortable with being on the sidelines of the story.
Gotcha. All right. Thank you so much.
Bet,
really
Julie.
appreciate it, Anthony. Interesting stuff on a very closely watched industry right now. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes at 3:30 p.m. Eastern.